Kid, I find Yes, there we go. What's going on? How's everybody doing? Interesting music, right? Let me make sure the what's it called? Desktop music's on. One sec. Just give me a quick sound check as always, and we'll get it started. Yeah, so yesterday I was, just give me a sound check real quick and then I'll tell you the story behind that song. Background noise isn't too much now? Yeah, I was muted for a second. How's the mic? Mic should be good. Good? Okay. So yesterday I was, God, stop the fuck out. Sorry about that. So we'll get started in a minute, but real quick, that background music that I just had on, that was, what was the name of that? One sec. Earth Melodies by Ekaterina Shelahova. And I was at the stores yesterday with my wife, and I pulled up to the store, and she ran in just to the pet store to get like this stuff for our dog's ear that has, it's like a cut. So there's this stuff you put on horses when they have a cut. It's like a powder. But anyway, I'm in the car and I'm waiting for her, and I'm like just browsing the internet, right? You know how you get lost in little corners of the internet if you're on like Instagram or TikTok. And the singer Ekaterina Shelahova, I saw her performance on, the video was, I guess it looked like some kind of European America's Got Talent, and I was like, holy shit, that sounds sick. It sounds like Lisa Gerard from Gladiator. But sure enough, so my wife got back in the car and she said, oh no, that's music from, I guess, The Last Kingdom. Anyway, so really cool. I like stuff like that. I have a really eclectic taste in music. You'd be very surprised if you saw my playlist. All right, so cool. Sound is good. Get started in a minute. I see some familiar faces. What's going on? What's going on? Just going through the chat. All right, so it's just after 1. For those of you that are new, Canner Clark on Twitter. My name is Ryan. If you're not subscribed to the YouTube, please go ahead and subscribe to the channel. This has been really consistent now. Every Tuesday and Thursday at 1 p.m. I stream for just over an hour, and then I host a call-in after, like 15 to 30 minutes after. I host a call-in. Really enjoy working with call-in and partnering with them. Similar to Twitter Spaces, but it's podcast format, so it's recorded. All of them are recorded. They're available on iTunes Podcasts or Apple Podcasts and Spotify as well. So you could look up the Canner and Clark Trading Lounge, and I am on both of those platforms. If you have an Android, if you have an Apple, you can tune in live, ask questions, shoot the breeze, whatever. But Tuesday, Thursday, 1 p.m. So make sure you subscribe, hit the alert button, all that, or put us on alerts, hit the like button. And yeah, gonna do this until the bull market comes back. So I promised I would stream more frequently during the bull market. It's obviously not the best time for someone who trades a lot. But here we are. As a reminder, none of this is financial advice, strictly for entertainment purposes only. If you're interested in any of the products or the platforms that I recommend, there's some links below. You guys see me sharing Phemex all the time. I think that if you're looking for an exchange that does not require KYC, as most exchanges are going towards KYC, Phemex is probably the best choice. I think it's superior to like Delta and KuCoin. It's got 200 pairs, spot, perps, all that stuff. Been sharing them for a really long time now. So Phemex.trade is the link, and that gets you access to, now they're running a $4,500 promotion. You know the deal though. You have to deposit. You can't just sign on to the exchange and then take money off the exchange. You have to deposit a certain amount of Bitcoin, and it qualifies you for a bonus that you could use towards whatever you want, right? Which is more than likely going to be used towards fees. And that's it. That's it with the formalities. Get those out of the way. Oh, just as a reminder again, one of the great things that we've added, and I want to shout out to 17 Bidding, is stream summaries. So I know not all of you can make the stream. Maybe some of you find it difficult to keep up. So summaries are phenomenal, right? He does a really good job of capturing all the meaty points, communicating them in a very clear and concise manner. So after the stream, you'll see that I will share the link probably within an hour or two. And if you want just to go to 17 Bidding's Twitter page, put him on alerts, and you'll see that he will share them, and they're published on Medium. So I think it's been a phenomenal addition. He does a great job, and yeah, I think that covers it. So I don't really have any let's change the screen real quick. I don't really have like a whole spiel to go into in the beginning, as I've done for the last couple of streams, just kind of reiterating the macro, what kind of environment we're in. You know, we're in a very non-accommodative environment. I've said this repeatedly. If you guys need more clarification on what I meant by that, the last stream summaries are there, right? That's the purpose of them. That's the benefit of having them. You know, the S&P had a down-only day yesterday, so you'll see that I will more often than not be charting the ES, which is the E-mini futures contracts. This is, we're well off the highs, right? This is well into a bear market. In my opinion, we're well into a bear market. A day like yesterday, one of the worst days we've had across the board in equities, and I think this bears repeating because whatever BTC is doing right now, the S&P is doing as well. There was a brief period of decorrelation yesterday. So just to give you an idea of what I'm talking about, this is the last 24 hours, and I will add BTC to this. And you'll see that BTC started outperforming the S&P, right? So this gold, or this orange, right, is BTC. Now, they're still correlated, right? Very strongly correlated. What has happened in the past is the brief periods where there has been decorrelation. There's a case to be made for obviously when markets bottom, risk assets will get lifted up again more aggressively. BTC off the March 2020 lows led, right? But it leads in terms of beta. It still implies that the S&P has to bottom out. I don't think, again, and I said this last stream, I don't think you're going to see BTC moving up while the S&P is still moving down. I think what we saw yesterday, and just to remind everyone where we are, so this is where we began to decorrelate. So this is today, but going into these lows as the S&P was continually moving down, you could see that there was a slight divergence in price action, where BTC no longer had the same beta to the S&P. It began to outperform. Now, this is my theory. This is what I think happened. That was the 1 minute chart, right? Just to show you, the sort of granular activity that took place and how the S&P behaved with BTC. In my opinion, what took place was, this is a 4-hour E-mini chart. We had what looked like a very significant bounce. This is going back to May 12th. Very significant bounce off of the first level that I indicated in the last couple of streams would be an area of interest. This is last year's point of control. So this was between, it was like 38, 38.5. I had mentioned 38 to 39 as a good area to expect a bounce in the index. So we get a bounce, get this kind of V-shaped bounce, right? Strong move off of that level. And then yesterday was just a one-sided move down into that low. If it's a bottom that's forming in the S&P, if it's a bottom that's forming in BTC, you could have moves that are going to look really ugly, right? They're going to look like they're beginning to, we have something that looks like it's maybe a larger breakdown in progress. It's easy to assume that, it started extrapolating past the near significant level, but what you'll see in the S&P is a lot of times at bottoms, it will do this. You'll have, the first V-shaped bounce, then a V-shaped reversal of that, and chop up down here, and it could chop up down here for weeks, and be very tough trading conditions. So what I think happened was, as we were approaching a level where a lot of people were going to expect a bounce, right, regardless of the fact that it was very violent into this level, I think that as that occurred, what we did see in anticipation was, all right, larger players that are maybe trading stocks and trading BTC, or just Bitcoin traders alone, I've seen some people, speculate that it's Alameda. Haven't had a chance to really isolate for CBDs, but I don't think that's necessarily the case. It's obviously a lot more than just one entity. I think what we saw is that into that low, there was an anticipation that the ES was going to bounce, or the S&P was going to bounce, and people just started getting into risk again to play, to sort of front run that move. But since that occurred, we still see the same sort of one-for-one relationship again. And we'll zoom in a little bit more. There might be brief periods of outperformance, but if you just look at it sort of as a whole, we see that the moves are relatively similar. Now, if the S&P goes on, move sideways, continue to range, form value, then then maybe we could see BTC continue to move up and really begin to outperform. And I think whatever decorrelation happens, if there's a decoupling rather, I think it's brief, right? I think that moving forward, it's not. I think it's kind of silly to expect that the S&P and BTC would suddenly go from a period of being really correlated to suddenly being, decorrelated. A lot of people ask me, about the dollar and treasuries and oil and gold. Guys, it's really important to have a holistic view of the market, but I see people looking at the ES, looking at the dollar, looking at oil, and then trying to, synthesize that in a way and trade crypto. I just think it's a really messy way to go about things. I think that, there is a, lead-lag relationship for the most part, but I still think you could screw yourself up by focusing too much on the ES or the S&P. I think that ultimately what you want to do is you want to be able to distinguish what kind of environments you're in. Are we in, a really shaky environment with the S&P? Are we stable? Are we bullish? And just off of those alone, those categories, maybe you can begin to, tailor your risk depending on what kind of category we're in. If we're putting in sort of a double bottom, now I'm biased towards the long side. Looks like we might have a little bit of a tailwind, at least in the short term. If the S&P takes out a major structural low and we don't see a immediate response, well, clearly at that point, you shouldn't be taking as much risk in crypto. Whenever we lose significant levels in the S&P, crypto definitely cares. Again, just to reiterate, I think that what we saw down here was the result of smarter participants sort of front running what was likely going to be an inevitable bounce. Yesterday, like I said, though, yesterday for the S&P was very one-sided. There was really no relief all the way down for most of the duration of the day. If you put something like maybe a 10-period moving average on this, put a 10, and we're looking at a 5-minute chart, probably see that most of the entire way down, so probably that or a 20, there was really no relief. Brief periods of respite and relief, but it was a one-way trip all the way down. This never bodes well for BTC. So I don't want to spend much more. That doesn't sound right. Hold on a second. Let me just look at the chat. Yeah, I think the best thing to do is just trade market structure. Trade your significant levels. Trade where buyers and sellers seem to be most interested, and not focus too much on the macro. Again, I don't want to get into reiterating what I've said during the last 3 or 4 streams for 20 minutes at the beginning of the stream. So with BTC, just really quickly, yesterday I ended up longing and cutting it a little too early. Clearly cutting it a little too early. Now, the idea is if we just look at since the lows, right? So since the lows, we've had a very clear range forming. Value developing between, right around, aside from this large spike down that we had, significant volume at these lows, and I'm kind of blocking it right now, but right there. We've had value developing for the most part between 31 and 28.5. So it really began to tighten up the last 5 days. So this is what this composite is right here. So that's between 29.3 and upwards of 30,400. But we're still within a range, very clean range. As the saying goes, don't diddle in the middle. not really good from a risk reward standpoint to get involved in the range. If you're short from the highs, if you're long from the lows, there might be a case for not really changing much right now. But getting involved in the center is clearly not a good area to get positioned. So I was looking for a long back at what would normally where you would expect a response, right? So again, forming a range for the last couple of days, going back to May 12th, last 5 days are even cleaner. You have more of a deviation before that. Things are really beginning to tighten up overall. While I do think it's possible that we fill in this wick down here, more than likely you see that level get front ran, and you're not going to see, just a couple days into the structure, you start bleeding down again. It's really easy for this to trap both sides for, another week or two even. So expecting this to continue right away with really no traps, I think is unrealistic. So this was the first area to look for something like that. And I mean, a structure where you have a composite forming as clean as this, even if you were short here, right? You're short here, your invalidation is really close. Your target might have been down here somewhere around 28, 27, but upon reclaiming the last 5-day range, I think it's clear that the idea of continuation, at least in the short term, is off the table. So my focus was re-accepting back within this range. So I obviously front ran that. I started averaging down because I ended up longing a little bit too early. But re-accepting back within this range and playing from one side of the range to the other. And if I show you the TPO, it's a little bit more easy to see. So I'll just switch it up. So here's the last 1, 2, 3, 4, 5. It's actually 6, including yesterday now. So we won't include yesterday. I'll just show you what the trap looked like. Okay, so remember how yesterday I said acceptance outside of these lows would lead to a first target of 28.4, right? So that naked point of control from that prior day. So that's the low that we put in from May 12th. So this is a very clean composite, and you have price ranging really neatly, right? You didn't necessarily have a ton of inside value. You had an inside day set up yesterday. But instead of breaking down and continuing, instead you trapped all that activity at the low. So once you re-accept back within a range, it's just more than likely that you fall back into that same sort of behavior that occurred previously, right? So you're looking from, at this point, range low to range high. And that naked point of control would be the first area where you would expect some type of pushback. How do I make a smaller chart on the right-hand side? This is EXO charts. And that is that's just another window. So that's a footprint chart. But just getting back to it. Voice just cracked there. One sec. So we're in a position where we have what looks like a breakdown, and price re-accepts back within the range. Immediately, considering that the S&P was doing something relatively the same, the bias has to be back up. It's just very unlikely that we're going to accept back within the range and then have some kind of breakdown. And if we do, at least it's cleanly defined. If we had something like this, let's say that we broke above, 29.6 and then began to break down and treat, 29.4 once again as resistance, maybe at that point you could say, all right, so this is a lower high, right? Have some kind of stop back within the structure. We failed to accept back within the range. And then maybe again at that point begin to look lower. But as it is right now, it looks like there was a ton of absorption at these lows. And if you look at Binance, and Bybit was relatively the same. So one, just look into this move so far. We haven't had any major wipe of this OI. And even in the pullback, there wasn't really any significant change in OI. So I think that it's possible that we see a much larger squeeze up. But just getting back to the low that was made yesterday, so this is that break below the composite. Just making sure that you're still following on, because I have to make sure that my camera isn't blocking the chart. So this is what we're looking at, right? This is what a trap looks like. You have a low put in, okay? Ton of selling at the low, aggressive selling at the low, right? If we look at 67 million contracts traded, 21 million delta, so negative 21 million. Then we have another low made below that low. Less selling, less trading overall this time, still very aggressive into this low. And this is what I'm talking about when I talk about absorption and then price remaining bid. So if you see, we broke down, just sort of distinguishing both of these ranges. Aggressive selling into the low, break below the next low, still more aggressive selling, sort of anticipating a further breakdown. As we're getting that selling, open interest going up, and then price reclaiming an area where most of the volume came in. So not trying to make this too messy, but trying to distinguish my point. So this level, so you have this under over, ton of volume done down there, less volume overall though, right? So it's sort of like sellers have already shot their shot. And then when price reclaims and delta starts flipping, right, and you start getting that aggressive buying, this is what I'm talking about when I'm saying price remains bid, back in the opposite direction. So aggressive selling, aggressive selling, aggressive selling, trap through those lows, right? Trap, and again, the lows that I'm talking about are, is the composite profile. It's tough to keep track of all these. Talking about one screen, but it's not on the screen right now. That composite profile, that low is up here. So market's moving down through there. It looks like it's breaking down. And now instead of continuing down, you have this under over and price remains bid. And you can see all of the volume that took place at the bid, and yet price is able to hold the level, right? So suddenly all of this activity is now underwater, right? And we're trading back above it. And this is sort of like, this is one of these setups that you could see take place in swing failures, under over, mouse traps. This is a failed breakdown. All of this selling is relative. You could say that it has been absorbed through that low. So once you start trading back above it, it's really easy for things to get dicey. And anyone who sold right here, you just have to think how you would respond. Anyone who sold right here is going to be forced into a position where they have to cover, or they're hoping that when price comes back to at least their break even, well, they're going to cover, right? For the most part, they're going to be covering, voluntarily, or what I was going to say is if price continues to move up, they end up getting squeezed. So there was this that clearly took place on Binance, right? This was the original move. So you've seen that this has taken place over an area, right? So market moved up, attempted to break down, and again, you just still have these traps that are taking place and price is remaining bid. This brings us to where we are right now. So the entire way up, I'm trying to go, this stuff is easier to show like in real time as it's happening. It's really, it's much easier to show it in hindsight. But as we re-accept it back within the range, so let me just get that level, 29.39. Here's the retest of value, so of that composite. So price breaks down, a ton of selling into that level, open interest going up, and again, that level holding, and the entire way up, right? Every pullback, you're accumulating all of this volume at the lows. Again, open interest steadily rising, right? Delta remaining negative, so very aggressive selling, and instead, as I mentioned just a second ago, price is remaining bid. So remaining bid meaning market moves up, sellers try to auction this down, right? Try to sell this down aggressively. They're all involved right here, and now price is moving up above them, and now price is remaining bid above them. So the fact that the same, if not more volume was transacted here meant that as we moved up, the bid followed up as well. So it would be like, right here, let me one sec. So as price is moving up, it'd be like this book continuing to follow up price and absorb any kind of selling that came in. It's showing you that there's willing buyers that are chasing price up as it moves. It's kind of messy right now looking at the footprint and trying to find out where we walk. I mean, it took place the entire morning, but I don't like to go over footprints in hindsight because it's hindsight at that point. I mean, it's very clear. There was aggressive buying too, right? That if it was the opposite, if it was through a significant level towards the highs, we could say, oh, this looks like a trap setting up. But you do have to remember, you have to have some kind of prevailing bias, right? or it pays to have some kind of prevailing bias. And off the lows this morning, we knew that the ES was bouncing. Things were bullish leading into the New York Open. So we were looking for that retest back within prior value. So it's not like we're just pulling this out of nowhere. So that brings us to where we are right now. No, I'm not going to move my live stream an hour earlier. Come on, man. So we're back within value. So a very accommodative area. Not an area where you really want to build some kind of new position. If you're long from here, the area where you would look to long would be, somewhere within single prints within this region. So single prints would be an area that we're kind of coming into right now. So this is your single prints from this trend day. But if anything, I don't think that from a risk to reward standpoint, I would want to get too aggressive here. I would rather see, and again, just to reiterate, we've had a much larger breakdown. It's not like we suddenly went back into a bull market. I would want to get involved somewhere closer to the lows of this composite, or if we accept it above. Right, so again, this area we've been ranging within for the last 6 days. So this was a failed breakdown, but we could very well do something like this and then end up continuing to do what we already did back here. Right, there's no reason to assume that this necessarily has to end now and we have to, continue to move up. So I would rather see that we can accept back above something like yesterday's high, or get involved for maybe a second retest of, this is 29.5, 29.4 region. That would be the lows, the value area low of that prior composite. Now, if we came all the way back down there from here, it's not going to look that good, right? But at least it's a reasonable area to define a position, right? So this is a range, very accepting region, failed breakdown right there. Maybe we move sideways a little longer. Maybe we get potentially another setup at this low. Now, not for nothing, I would be much more confident buying this, some kind of move above, than buying this retest down here. At that point, if we bought that retest, it is definable, right? But you could start making a case for, this ultimately just being another lower high, right? And then us continuing to move lower. So it is definable. And right now it is serving as resistance. Again, so just to reiterate, here's our composite. So maybe we find support at this point of control. That would be bullish. But if anything, in a strong trend day like this, if I was looking for, if this is going to resolve much higher, I would honestly rather see it give short pullbacks and continue to move above that composite value area high. And yesterday was actually an inside day setup too. So this is, okay, one sec. It was in ETH, it wasn't in BTC, was it? One sec. Drawing tool's a little wonky. Yeah, it must have been in ETH. Yeah, it was. So does that all make sense? You guys all following with that logic, rather? I'm just looking at the chat. Yeah, I don't want to be too biased right now either way. Trading levels seems like the smartest idea. And when I say levels, I'm talking about specifically my levels, right? So levels that I think are going to offer the most actionable setups. That's why I wouldn't want to get involved like anywhere in the middle right here. Even if, the rotations look like they have a certain cadence to them. For example, maybe this is the beginning of a trend day and this is our pullback and we're going to look at an expansion further up. It's still, that's ETH, excuse me. I think it's still too early to get, really bullish and assume this is the beginning of a much larger move. I'd rather wait for the actual evidence. So that means I'd rather buy highs. So I'd rather buy, and in this case, I think it's much more clear, much clearer. Why? I think this day is combined. This doesn't look right. Reset. Yeah, because it's not showing me the 18th right now. One sec. Can't figure out why that's happening. Let me just go to the other screen real quick and put on a regular session profile. Oh, it is normal. It's just, that still looks really wonky. Is that right? Or is that two profiles merged into one? I mean, I could just do this. Yeah, that's definitely two profiles. I don't know why I can't undo that. That's a pain in the ass. 1 second. If I change the sessions. Let's see. I'm looking at the TPO chart on the other screen right now, so just bear with me. There we go. That should be right. Let me go back to it. So here we go. I just wanted to show that transition a little bit cleaner, right? So the idea behind the trade. Trap below the lows into what is the significant low for the last week's range. Reacceptance back within composite, and then this is ultimately as far as it would go, and I would hold a position until. Would rather see, like I said, just going over it again, I'm sorry because I couldn't figure out why that profile was weird. Would rather buy a breakout above or look to see what kind of retest we get if we pull all the way back into the low of this composite. And again, like I said, it would be less attractive, I think, if obviously we came all the way back down here to give that a retest. If this is some kind of reversal, you want to see that the move is continuing to pick up speed, right? And it does look like now you're getting a good amount of late longing, and it's doing the opposite that it did that occurred with sellers on the way up, right? So instead of us continuing to move up as delta comes in after the selling came in, we're just beginning to drift lower, which is never a good sign. All makes sense? Sorry, I had to take a second to fix that profile. Okay, so wait a second. Michael, I know that you're not serious about your question, but the 1080p streams, is the stream not in 1080p, or are you just being sarcastic? The session profile is volume profile visible session, I think. So it's VPSV, volume profile session volume. So one thing that we haven't done though, so it is a, let me just see if that question, I asked about the stream. Is the stream in 1080p? Or is your thing not in 1080p? Yeah, that's Exo Charts, by the way, monkey. 720, really? That's weird. Hold on 1 second. What the fuck? I don't know why the stream is in I guess gotta fix that. That's super weird. The last ones haven't been in that, right? Damn, sorry about that, guys. I don't know how to fix that midstream. I don't think I can. No, I don't. Wait, do I have my... Hold on 1 second. Tell me if this fixes it. Just give it a second. I mean, I don't know why it would. I had my VPN. See, I'm wondering, yeah, right now, you got a decent pullback, selling coming in, but now you're starting to see buyers get trapped each time. So if it's going to continue, it would continue from here. Otherwise, the trend is kind of collapsing on itself. Weird. Yeah, I don't know what that's all about. I'll make sure that I fix that for the next stream, though. One other thing to point out, strong move off of today's open, right? BTC hasn't, usually when you have a strong move off of the open and you have what is the beginning of a nice trend day developing, the first pullback to VWAP is something that usually gives you a pretty decent response to scalp off of. So we haven't had any real pullback to VWAP after the breakout. So what that means is it's possible that, you know, if we do get some kind of deeper pullback, that the area where a base would develop, or just consider it like this is maybe how you should, rather than thinking, sorry, I got itchy nose, rather than thinking, oh, we have to come all the way back down to the value area low of that composite, it's possible that you see something kind of front ran and develop at VWAP before continuing up, right? So a swing failure pattern looks kind of similar to the what I just went over on the footprint. You could actually see there was a decent swing failure earlier, so I'll show you what took place. And if you're scalping like a 1 minute chart, this would be helpful. So we're going back to right here. So this was a nice swing failure. Okay, so that is at 29,795. So I'll just make sure that you guys can see this on the other chart. One sec. Oh, got to change the screen. Sorry about that. So here is that level that I just pointed out. So strong move up, right? On high volume. Second move up through the high on less volume, and buyers are trapped above, right? So you have imbalances, you have volume trapped above that level. It doesn't have to be that it's just volume right here. You don't even necessarily have to look at the footprint split. What you can do is just say areas where there was a ton of volume through the level, right? So the best swing failure patterns happen when a ton of positioning is caught off sides. So in this case, you had a move up, looked like almost immediate continuation. This is a low time frame chart. But this time around, you'll notice that there was less volume through that high. So, you know, no big follow through, still a lot of aggressiveness through the high. And then the swing failure is when that starts unwinding. So as the market comes back down below that level where it got really aggressive through. This is a decent example, but there are much better examples. There are some cases where it's, you know, very one-sided, where you'll have like spreads kind of blow out through a level. So, you know, if this was like the high you're looking at, market rips through, and then it looks something like this. A bunch of volume and no volume here, just a bunch of zeros maybe, and then the market trades back below there, and that positioning, the combination of stops running, OCO orders triggering, help this begin to unwind much faster. So again, doing a decent job now, but it looked like it was losing a little steam right here. Yeah, whenever I watch streams, it's You sure that it's not your computer, right? That you're not just, you don't have it selected at, let me see something real quick actually. Let me just watch my own stream. Let's see. Settings. Oh, yeah, it only allows that. Oh, that's kind of crappy. I don't like that. Darn. All right, we'll have to, I'll definitely fix that for the next stream. So pretty straightforward. There's not a whole lot to go over during the stream. ETH, though, I want to touch on ETH. ETH is lagging, so it's possible that, I'm not going to change screens actually. It's possible that ETH is just weaker to BTC right now. Bitcoin dominance is going up. Alts are getting hurt against Bitcoin. More of a squeeze in BTC. The same setup that took place in BTC is, we're closer to where Bitcoin began back within the composite. So here's ETH's composite for the last couple of days. So it's between 2,100 and 2,000, so 2K. This is where Bitcoin offered an initial pullback, but this is on a 30-minute chart right here. And if you looked at BTC, it was much more of a snappy response. So Bitcoin's acceptance back within its composite value area. You see that there's a lot of wick, right? Whereas with ETH, we're already kind of fading back into that level, and still can't get above weekly VWAP. So that's the line I have on this chart right here. So I think that ETH is just weak compared to Bitcoin right now. I don't know if, so normally if, I guess in other conditions, I would consider playing sort of a lead lag. So ETH is just dragging behind Bitcoin. If we're expecting continuation with Bitcoin, we would play the same setup with ETH. But I'm concerned as to why ETH is not following through in the same fashion. I mean, if you're just taking trades mechanically, so now we're starting to have a lot of imbalances come in with Bitcoin. So there's a lot more buying now. But again, we're at the high of a range. So we're closer to the high. You can still take the setup with ETH mechanically if you wanted. I don't know if, we'll look at it right now just on the footprint. You have a significant amount of absorption so far. So this is ETH on Binance. You have the same kind of setup sort of taking place. So that under-over that took place into composite value area. So remember when I was first showing Bitcoins, you had a pullback, a deeper pullback, more volume done. If anything, what I would want to see, and this could offer a decent long, something like this. So here's all the volume into the lows, right? There's actually more volume though, whereas Bitcoin began to taper off. So when Bitcoin made the first low and then the second low, volume was actually decreasing into this move, even though there was, it was one-sided in terms of delta. So it looked like there was less selling. There still was increased selling in here, but if anything, let's say that we start trading back above this pocket and then selling into that and holding, then maybe, that it's a decent long worth taking with ETH. So if you had, break above, ton of selling, right, and then price is able to remain bid, then maybe ETH is just lagging and it's a trade worth taking. But I think that we're obviously highly correlated right now, so it's dangerous to take that trade and think that it's a lead lag, right? There's been so many times before when we're not in really strong conditions where something that normally has a lead lag relationship, it doesn't play out the same way you would expect, right? One of them just kind of gets left in the dust. It doesn't really get to fulfill the entirety of its setup. But, it could be just fine because Bitcoin is so far holding this level. So something like this, we have a little bit of absorption, but with BTC right now, there's there's a lot more buying that's coming in towards the highs now that's not leading to anything. Whereas that first move off of the composite value area low, when Delta started flipping, we were closing towards the highs of the candle. Yeah, BTC and ETH are highly correlated. What I think is, so even though, like, for example, BTC gave more of a setup, I think ETH kind of is cleaner and trades more technically, because I think that while Bitcoin is more liquid, there's more legacy algo trading that is taking place between the S&P or desks trading the S&P and trading BTC than there is with ETH. So I think it's just like, why some alts are really good to trade versus Bitcoin. It's because they're cleaner and they are more sort of retail driven. Even though ETH is like, it's the second most popular crypto, there's obviously a lot of institutional presence. I don't think there's the same, HFT that is trading the S&P that's, also spooling up with Bitcoin as well. I think there's less of that. Delta flipping means we go from a period of, so for example, in some kind of trap setup. So I'm going to go back. Sorry, I'm on another screen. I'm just... Okay. Top right. Using the stream deck right now, so... So into the low, you guys can see this, right? Even though it's 720. Into the low, right? It's very one-sided. Ton of aggressiveness. Again, like I said, price is able to trade back above there and remain bid. So the selling that comes in, we're able to hold it. Delta flipping means that we see a ton of aggressive buying come in. So there's a flip, right? And then we're closing sort of towards the highs of the candles. If you use like it's not as obvious on a time-based candle. If you use like a delta-based periodicity or a range-based periodicity, we're getting this aggressiveness towards the highs of the move out of the level, rather than, we get aggressiveness towards the highs on the turn and then price is able to be suppressed. And let me go back to where we are right now. So see this? The market flipped, less volume though, aggressively out of this level, and price is not able to close. So hopefully you could see. Let me zoom in. This is the actual candle under here. See it now? So we're not really getting the aggressiveness towards the highs and then closing at that level. One sec. So here's the wick. Now it should be a bit more obvious. So all the volume that's coming in, we're still trading below it. Whereas this move down here, it's much more explosive. Now, some cases it's much cleaner, it's much more obvious that into the low you'll see just negative delta, negative delta, negative delta, and then once it flips, it's just positive all the way through. So that's that's pretty basic. You want to see that clearly when the market's moving up, that buyers are getting much more aggressive. So I'll show you how I find a composite. So I see a couple questions first. So my hit rate is around 65% right now. It's funny actually because I just opened up another sub account. So this is my performance so far on that sub account. I haven't taken a single trade on it. I just did this morning. This is on CoinMarketMap. So I want to try to run up a sub account, and I'm going to use an exchange that allows me to share the page results. So the last exchange I was using didn't allow me to share the page results, which is kind of a pain in the butt because all I was doing was screenshotting the results. As far as composites, So normally to even begin forming a composite, you want to see that there's some kind of overlap of value. So a normal, if we have, strong trend day, so that, trend day and the beginnings of balance form. If we have a balanced day and then we spend the next day, most of the entire value area in the prior day, I just combine this into a composite. So I combine these two profiles because there hasn't been much that's changed. We've formed, a range. So you want to see at least like 50% value overlap. Now, there's times when there's a ton of dispersion and that doesn't occur. So this was a big bounce. Here's value here, migrates lower. Value down there, migrates higher, back into the prior value. You have a little bit more overlap here. Suddenly you have more overlap here. It's beginning to tighten up. It's still, even though things didn't start off perfect right here, it's clear that the market is stuck between here and here. So there's a very clean range that's forming. Right? There hasn't been much of anything besides, there's up and down activity within here. There's a lot of variance, but it's sideways. So what I do is I combine all of these profiles, and just to identify where value had developed, where we spent 70% of the time, I will create a composite value area. So I'll usually put a box and then I'll open this up because I don't want to not see what occurred on the individual days, right? I do want to know where the composite is, so I have it, distinguished by this box. But I also want to know what yesterday's profile looked like because, if I form a composite, it's going to weigh all of the previous days and it's going to give me some type of naked point of control or point of control strictly based on the last, however many days are in that composite. But what might be relevant, obviously, is recency, and that would be yesterday's structure. So if I combined all this and didn't see yesterday's structure, I wouldn't see that this point of control was specifically right there and would offer us the first sort of significant resistance back through this range. So it helps to know specifically what yesterday's profile looked like, just to have better expectations as we go back through the level. And you can see that if we go back to this, and I'll just pull open. There you go. This is yesterday's point of control. If I formed a composite, I wouldn't have really seen that, right? If I just left the composite in view rather than expanding it. So on the way up, that point of control acted as resistance. And as I've said many times before, I don't like to take positions off of point of controls. I really don't like to. So for example, accepting back within this range, this is an area where I think that it would, give us some kind of short-term kickback. But that's definitely not an area where I look to short. If anything, when you're long from here, this is the first area you might consider taking profits into because it's more than likely going to give you some kind of kickback. And two, there's probably a good amount of liquidity here. So it should be pretty accommodative in terms of closing out positions into it. After breaking through, as I said, this could be an area where you would expect maybe some kind of support to develop, right? So if this is going to be a trend that resumes, the idea is this doesn't have to come all the way back down to these lows to give a long, right? It could very well be that as this is transitioning, right, just that anywhere lower or closer to the low of this composite is going to be an attractive area, right? You have a few different things that are sort of, confluent. So you have the extreme low down here, you have VWAP there, and you have that prior point of control, right? So that alone, could give us, the idea is to have an area where you're going to look, right? Where do I want to look to see whether or not, some kind of support is developing, right? And then my bigger idea is that, we're going to be continuing to move up. So this is possibly a good area to tag on risk, right? Or define a position. Now you know that if after all of this, if we're back below that value area of that composite, that this is definitely going lower. So this is probably the best area to define a position because of that. Because, okay, if you got long here, if you're down at 29, you're definitely wrong. Whereas the idea is if you take a position off the point of control, if you take a position closer to VWAP, you could be in for a ride, right? Because there's no rule that says it has to stop here before continuing up. You could get that much deeper pullback. So, you want to take positions where they're most attractively defined, where they're tighter. For example, the best short was up here. The best short was at the composite value area high. You could say, when you're up here, you could say, obviously it's late now. I wouldn't want to take it now, but I'm shorting this level, even blindly, let's say, and my stop is going to be through these highs. Because I know if we're back above here, this is definitely going higher. Whereas we might chop around here for a bit, like we did in the past, and then continue to rotate lower and still leave me with a good short. And yesterday I was too quick out of this position. So I longed down here yesterday. So remember I shared that picture. I took a screenshot of this. I longed from within here, and I built more of my position down here. And the drawing I drew was this, right? And it went something like that. So it left out all of this, but the idea was the same. You have a significant low that's forming. Market looks like it's going to break down because it's having trouble here. Breaks through, traps a bunch of activity like we showed in the footprint, and then reverses. So I ended up getting out of this position too early, right? But I think it was reasonable because this would be still considered resistance, right? So I ended up getting out around here. I didn't want to hold a position through the night. It's kind of stupid, honestly, because I like, and here's the reason why. I've gotten so accustomed to manually exiting positions just to protect myself because we're in a bear market that even in the past when I've gone to positions, I've gone to sleep in positions many times before and just left to stop. I don't like my stops to get hit. So for me, it's like I don't want to go to bed, even if even if I'm pretty confident in the position. I'd much rather take what I have before going to bed on the position. And as you can see, it didn't work out favorably because we ended up moving up, over 1,000 points more. But I'm so accustomed to pulling myself out of position that I'm not used to just setting and forgetting anymore. I don't think it's a very safe environment to set and forget. My trades are determined. If I'm taking a trade based on either acceptance or absorption, and I'm looking at it and confirming it either with the CVD or with the footprint, I'm identifying that, there's clearly a level where a ton of activity had transacted, and at some point relatively close to there, they're wrong, right? So for a setup like, yesterday's long off of those lows and adding to that position, I would be wrong. Let me go back to it. So let's say that, for example, this was your retest. That was the first retest of the composite, but even before that, let's go back to where I longed from. Junk this a little bit closer together. I don't know why I said junk it. Clump it closer together. There we go. So this is actually, I longed earlier than this, but it was the same setup. If my idea is, for example, based on what I just said, right? We have a ton of selling, right? Anticipating a further breakdown, aggressive selling towards the lows, and then you have the first sign of absorption. So it's not absorption if we're able to continually move forward on selling. It's absorption when we get selling trapped and price is able to stay above that level. So that's when it starts showing signs of absorption. This is where you actually have price remaining bid though. So these 2 points right here. So 13 million contracts, 15 million contracts. So here's the under over. So selling brings us lower, so it's still working. First sign of a trap. First sign that they're really caught off sides now because this seller, just think about it like this. Whoever is bidding here, market makers, passive buyers, they're willing to passively bid this in a place that, again, when selling came in, walked lower. So now there's a willingness to buy and it's absorbing it higher now, where higher than all of the volume that came in. So the setup is at that point pretty clean. So you have this under over confirmed in the footprint. You don't have to look at footprint charts to see absorption, right? You could pick up on this and price action to some degree. There's absorption that takes place in, over a larger area in CBD, but this is, a little bit more granular. This is wrong if clearly more selling comes in and takes us to new lows. So a lot of my invalidations that I just pull myself out of trades are, let's say this is my setup. I'm looking at this, I'm saying, oh, it's bid now. The moment that we start coming back below that level and sellers are trading, we're getting aggressive selling and this is no longer remaining bid, meaning price is able to come back down towards these lows, I just cut it. I wait for the next setup to form. Because the idea is that the selling that came in now is able to hold previous levels that it wasn't. So I'm looking for basically like the book to thicken up. Let's just look at yes now. So one thing to remember is that tomorrow is OPEX. So big options expiry. I mentioned this a couple days ago, and I think I would be much more certain of trends that came out of it rather than trends that went in. So what that means is I'd rather wait for the weekend before we call any kind of larger bottom for the S&P. A lot of flows going into OPEX are usually going to be, I would say, deceiving. So you might have hedges unwinding leading to a short-term move. You might have, certain gamma effects depending on where we are with respect to, the larger strikes. But the idea is that the flows that we're seeing going into OPEX are usually due to OPEX. So I think I would be much more confident, I should say, in what comes out of OPEX, put it that way. Yeah, high time frame chart is still, so the weekly levels, monthly levels. I said the most bullish I would be because it offers us, I think, the largest play. So here's a weekly level. So that's that weekly low of the entire year. Weekly lowest close. Here's your monthly level. That is right around 35. I think that 35 level is much better. So the point is, and similar to what just took place in the low time frames with the last 5 days, long range, very clean. Here's your composite. If we were to trade, let's say we did something like this, move lower, or even let's say we went up right from here, I'd be weary of something that went straight up. I'd probably look to fade that right away. But if we were able to trade and accept back above 35, back above the lows of this prior range, that makes this move on, this is a daily and a weekly chart, what just took place in the last 24 hours. So on a much larger scale. So this is the same setup that just took place right here. So here's range. Looked like we were breaking out of the range. Obviously different implications because we actually broke out on the higher time frame chart, but accepting back within the range leading to a target of the other side. So, and the market is so reflexive that if we broke back above and accepted and started holding 35, I think that we're going to rip up. Midpoint seems reasonable, 40, 41, but I think that you're looking much higher at that point because then this is this entire move is a false breakdown. And then you're looking back up here. And then, not for nothing, let's say you get a monthly close above there. Things look much different at that point. Then this is a large deviation like this, and you're looking at, let's say we get back above here. If we close the monthly back above there, we have 12 days left. If we close the monthly back above 35, then I'm looking at 48, and then ultimately back up here, honestly. But that is a pretty tall task. But then this would be, there's no reason why this can't, like I kept saying in the last few streams, I kept reiterating this. the first order of thinking is that a breakout should lead to a strong move, right, in the direction of the breakout when you're in a range. If we just accept back within the range constantly, there's no reason why this can't continue to do this over time, right? And then this being a much larger, because we have a lot more participation behind it, a much larger situation that we had back here, right? The same kind of thing though, right? Everyone anticipated a breakdown with each move towards the low, and then what we ended up doing, we ended up moving sideways. Whereas, this is clearly beyond that in terms of time, but larger move, expect longer sideways period. So this all makes sense. I got to cut, use the restroom. Gonna do a call in. Real quick. So we're obviously in a non-accommodative environment right now with the Fed. So what I kept saying was we're looking for a change in either narrative or policy. Policy is so obvious that it's going to be a late move at that point. You're going to be getting in the same thing that everyone's going to be getting in, but clearly it would mean that things changed. You can start having a much more confident higher time frame bias in terms of risk. There are obviously little details you want to pick up on, though, to indicate that maybe things are changing. And one of them was pointed out by Jim Bianco, and he was talking about yields going down. So bonds going up. So there's an inverse relationship between yields and actual so bond prices and bond yields. So the last 48 hours, we've had some of that. We had the 10-year, we had the 2-year yields come down a little bit. So it's the first sign that, recession, Fed's going to break the market. There was a lot of fear, but there was no real fear that was shown in the bond market. So we're actually just starting to see those get bid up, which is maybe, which is a first. So it is a good, it is something that I think is worth paying attention to in terms of risk, because it's actual fear coming into the market. So maybe we're getting close to, a larger rally and that sign in sentiment. And again, I'm just looking at the 2-year and the 10-year. 10-year, 2-year. So just the last couple days, we've seen them come off a little bit. All right, guys, I think I'm going to wrap it up, though. I'm going to be sharing the call-in link in about 10 minutes. We'll start at 2:30. If you guys like the stream, leave a comment. Please hit the like button. Nothing too exciting. This was mostly focusing on just where we are within this lower, this smaller range. Again, I think that we're just back in the middle of the range. I'd rather at this point buy above, this is the composites 30,004. I'd rather buy above these highs. So support established above there, or buy closer back down to the value area low of this structure. So you have your VWAP right here. You have naked point of control also. But this could be leading up towards the highs, and maybe we're going to get a larger move. And I think that the idea is that I think if we do accept above here, that this is going to be the move that takes us to like 34 to retest the underside of more significant structure, right? So more significant structure being right, this region. I don't mean it to extend it all the way up. That's the weekly chart. What we're really looking at is probably something more like this. So, 33, 34-ish region, extension maybe that far. See how price behaves there. If we start getting something that's a straight shot, I'd be much more likely to fade something like this. Look for signs of rejection into this level. Look for a slow bleed to form. If you get a slow bleed and you get one of these, spikes, followed by smaller spike, I'll probably just, if we have a move that you have a ton of liquidations, spreads blown out, that's the high right here. And then we have another effort towards that high, and then it's on, let's say, less volume and less delta overall. I'll probably short this, place a stop here, invalidation, I don't know why I put L, and then you're looking at something that maybe bleeds all the way back down. But be careful, because OI is still elevated, and it's been many times where we broke down out of range like this and ripped back through. Go back to March 2019. Had a range, broke down, ripped much further. So I wouldn't blindly sell it. I should say I'm not going to blindly sell it. I'd rather wait for that development. All right, guys, going to wrap it up, though. Thank you, as always. Please hit the like button, subscribe, and I'll share the link, and I'll go live in like 15 minutes.